today mostly a private industry function. Um, and and let me, sorry, I'm learning how to, do the slideshow. There we go. And so today really wanted to talk about one of the most startling elements of the last year, which is a very rapid rise in landfill tipping fees. And one way to think of landfill tipping fees is sort of a bellwether for the entire industry in terms of pricing for both for everything from collection to processing and disposal. Landfills are sort of the ultimate destination for much of the nation's waste. After from waste generation, we recycle about 25% of it. The rest goes to either a waste to energy plant, that's about 10%, and the remaining 90% of the leftover waste goes to a landfill. And so the prices have increased year over year to date at about 6%, which has been reflected in a lot of the recent company earnings reports that have shown almost double-digit growth. Much of that price increase is driven by the recovering economy in the wake of the pandemic, and also inflation in the form of higher fuel costs, labor shortages, higher costs of capital, equipment, and so on. Private companies are pushing these costs onto their customers, especially the municipalities which they serve. Looking around the country, you can quickly see that these prices vary greatly by region and are very much a product of landfill availability amid population density. So if you look at New England, or the Northeast has the highest prices in the country, that reflecting very short, very few landfills remaining in that region, and then in the Pacific, prices are more reflective of the same forces, but also a more regulated environment, especially regarding landfill diversion and recycling mandates. The Midwest and Southeast reflect some of the waste imports coming out of the New England region. Looking at landfill disposal by volume, you can see that the Northeast represents a very small segment. And it would be even smaller if we didn't include Pennsylvania in our calculation of the Northeast. Pennsylvania, already half of the waste being landfilled in Pennsylvania comes from New York and New Jersey. And then, of course, the Southeast and Midwest also are big recipients of waste from the East Coast. And you can see prices have been in various regions are following a very similar trend. They've been up quite a bit. And these are the highest prices in the country because there are very few landfills remaining. Connecticut has no remaining landfills and instead relies on waste energy and exporting most of its waste. Massachusetts may close its last landfill next year. And there are only 2 landfills each in New Hampshire and Maine, landfills of any size, really. And Rhode Island only has 1 major landfill. So everything that the landfills can't take has to leave those states. And so consequently, waste going into, for example, waste is exported out of New York City on a rail car, and some of that ends up as far as South Carolina, a large landfill operated by Republic in Bishopville. A lot of that other waste goes to waste management landfills in Virginia and so forth. Pennsylvania is the biggest importer, and followed by Virginia. Volumes in the South are up 2 and almost 3% for the year, which is quite substantial. And that also may be the effect of people migrating there from more expensive states. Same with the Midwest. Price increases of nearly 6% year over year there reflecting also the strong economy and migration from expensive states. And it's important to remember that Midwest and South pricing is affected by demand for disposal that's coming out of those New England states. The West shows some pretty stark price increases, and that's largely the result of just a few landfills owned by mostly by Waste Management and Republic, raising prices in Texas and Arizona. Volumes there are also higher at 2.8% year over year, and that's perhaps the result of all the Californians moving to Texas and Arizona. But it's still the least expensive region in the country, and that's because it has a very low population density among, amid abundant landfill capacity. And then the Pacific has been more stable. It's characterized by having fewer but more highly regulated and very large landfills. For example, Republic Services operates the Roosevelt landfill in Roosevelt, Washington, which is sort of on the border with Oregon. And it receives nearly 8,000 tons of waste a day, and much of that by rail from the Seattle area and also Portland. It's kind of an interesting story about Roosevelt. About 10 years ago or so, a judge blocked a plan by a company based in Hawaii that wanted to bring waste from Hawaii, which is also itself suffering a landfill shortage crisis. There was a plan to bring it by barge across the Pacific Ocean and up the Columbia River and into that landfill. And Native American tribes successfully sued to block it from further eroding their pristine lands. Anyway, I'm digressing. Looking at privately owned and operated landfills vastly outstrip their municipal counterparts in terms of raising prices. And there are several reasons for this. Municipal landfills on average are much smaller than the privately owned landfills. Many municipalities, landfills are exclusive to the communities they serve, and therefore the prices are much less connected with the overall market. Also, many munis landfills are also subsidized by the general tax base. And those munis that are open to outsiders must rely on the market to attract waste to those landfills. And so they're limited by, how much, if they do want to attract outside waste, they're limited by how much they can raise prices. On the other hand, private companies own much larger landfills, and they achieve the economies of scale in operating those landfills by controlling more of the waste, by ownership of various collection and processing assets around the landfill. So rather than being limited to one particular municipality, a private company can operate across an entire region and direct waste through its own trucks and assets into their own landfill, and then pass those costs on to their municipal customers more. And so now when we look at some of the individual participants, you can see that an illustration of what I was saying earlier about their ability to pass on, to raise prices more aggressively than their municipal counterparts. And this is also an illustration of continuing consolidation in the industry, which is giving them pricing power. Some examples include Waste Management's acquisition of Advanced Disposal a few years ago, and also Rising Star GFL based in Canada, having bought some of those divested or assets that were required to be divested from the Waste Management Advanced merger, along with WCA Waste and Waste Industries. So in general, these companies have exercised much better pricing discipline in recent years, even amid the volatile economy and the pandemic. It's really a far cry from the past when these companies used to beat each other up over market share and cut pricing, only to learn later that it took years to get some of that pricing back from their municipal customers. So they've gotten a lot smarter about their pricing discipline. Now, so far we've just been talking about landfills, and landfills are the cheapest form of disposal, as you can see in this chart. Transfer stations really are only waypoints for waste, so they must include the cost of disposal either at a landfill or a waste energy plant, but along with the costs of processing the waste and transportation costs. So they're very high. Waste to energy plants have very high operating costs in general, even net of the energy that they produce. And so they're really only economical in areas where there's a lot of high population density, like big cities and so forth, especially the Northeast and Florida, and where there's scarce landfill space. In Florida, of course, they have a very delicate ecosystem down there amid a very highly growing population. So siting or expanding existing landfills is very difficult. And so one of the pressures on pricing is, of course, the decline in the number of landfills. And you can see this rather startling decline in the early years. And a lot of that was really driven by closing old landfills that could not be compliant with various new, much more stringent regulations under the Resource Conservation and Recovery Act, or RCRA or RCRA, depending on how you want to pronounce that. And as the population continues to grow, NIMBYism exerts still more pressure to close others. And so one of the pressure, as these landfills close, you can see that the average volume accepted by individual landfills has increased very dramatically over the years. That it's the combination of closing landfills with, of course, increasing demand for disposal from a growing population and a growing economy. And right now, privately owned landfill, as I was alluding earlier, is 3 times the size of its municipal land owned and operated landfill. In other words, a private landfill today averages at least 1,000 tons a day in terms of just overall average, while municipal landfills average about 300 tons per day. And so with fewer landfills, more and more waste has to move over greater distances to get to these landfills. And that means it's going to more likely cross a state border or two, which is what this chart sort of illustrates, is the increasing movement of waste between states. There's also a certain amount of waste has always come in from Canada as well, and even some from the Caribbean into Florida. But much of that is from the Toronto area into Michigan. And then if we look at remaining capacity of these landfills, what we're finding is that, as we mentioned before, it's harder and harder to replenish this capacity. And so going forward in the next few years, we're going to see a little bit less and less capacity as demand outstrips our replacement of that capacity, is at least what we're seeing in the near term. And that's going to put even more pressure on pricing at the landfills, and therefore pricing across the whole system. And now I'm going to pass it on to Rob if I haven't chewed up all the time in our presentation.
You've done a great job, Jim. Thank you very much. Do we have any, it looks like we have a question. So why don't we take that question while I'm getting set up. And the question, Jim, is the Basel Convention tries to curb/regulate the movement of hazardous waste between countries. Is there any such legislation on the charts for movement of MSW between US states?
That's actually a very good question. Various states have tried over the years to, especially Virginia and Pennsylvania, which were which, as I mentioned, were big recipients of new Northeast waste, have tried various measures to enact out-of-state prohibitions, and in many cases, the courts shoot that down as an interference with the dormant commerce clause of the Constitution, which forbids individual states from regulating interstate commerce. But some of the states have been very resourceful. So, for example, Pennsylvania tax on a $10 a ton, or now it's $12 a ton, disposal tax on any waste coming into Pennsylvania landfills, but then turns around and gives that money back to local municipalities. So in effect, it's making it more expensive for out-of-state disposers than in-state people who are sort of getting the money back that they've had to spend on the disposal. So that's an indirect prohibition, but that hasn't been struck down by the courts.
Great.
Thanks so much. If you all have any questions, please use the Q&A function. Sorry, go ahead, Natasha.
Yeah, sure. I've gotten a few questions that have come out of the chat. And one is, where do you find information on regulations and ordinances countrywide? Didn't you all write an article, Jim, on that very recently?
Well, yeah, so I mean, obviously, sort of the Federal Register is a great. I mean, it's a very tedious way of looking at all federal regulations. It's quite a challenge to stay on top of all the various state regulations, and actually, all landfills and waste energy plants are regulated by their various state regulatory agencies. Pennsylvania DEP, for example, or the Ohio EPA. They sort of set regulations for the operations of those landfills based on EPA guidance. But there are lots of other regulations with regards to mandatory diversion or recycling. California has probably been the most aggressive in setting mandates and diversion requirements and recycling requirements. So you sort of have to go to some of these individual state regulatory agencies to get a sense of those. We should be doing that at Waste Business Journal, but it's quite a task.
Okay, I don't know why I thought I saw it.
Something that SWANA and NWRA might also track, but it would probably require membership and possibly even payment for something like that. So,
and actually, personally, with a background on food waste, I can go ahead and drop the ReFed policy finder for the U.S. It'll tell you all of the different food waste policies within the states. That's what I can share. I also have another question. How does a city lead in getting away from landfilling and initiate a waste to value pathway?
Well, that's a softball question. Join Sweep.
Join Sweep. Let Sweep help you identify areas of improvement that you can become less dependent on landfilling.
Yeah,
and it's it requires a comprehensive plan that involves your entire waste system. And that's why sweep is so beneficial. But Rob will tell more about that later.
Okay, and on that note.
And that was the final question. I have a question though that I'd like to ask. So Jim, in your work as you go out in the country, seeing these landfills that are about to time out, do you see more municipalities and local governments trying to move more towards sustainable materials management policies and solutions, or are they more looking towards these waste to energy kind of new plans and scouting for locations to design more landfills? Like what is the kind of feel, or is it kind of business as usual, or more municipalities looking for better solutions for waste diversion? Do you feel?
Oh, yeah, that's a very good question. It varies quite a bit by region. So in the Northeast, for example, where landfilling is already extremely expensive, you have a much greater economic incentive to do something more creative with the waste than to put it on a train and send it to Pennsylvania or Virginia, where your all-in cost is well over $100 a ton. So that gives you $100 a ton incentive to recycle it instead. And so some of the most progressive integrated waste recycling programs are in states where it's already expensive to landfill. And also, that's, of course, where the waste to energy plants are. There's been a lot of criticism of waste to energy over the years, but in fact, waste to energy and recycling tend to dovetail very nicely together. So there's always increased recycling in and around waste energy plants, especially since waste energy plants are somewhat finicky on the type of waste they can take in there. But it's really an economics question, and the sad reality is that many of these municipalities are very cash strapped, and so they're limited to what they can do, and the volatility of recycling commodity prices, which Rob's going to talk about in a minute, isn't really helping. The good news is that technology for recycling has improved dramatically in the last 5 years and will continue to do so, especially with the implementation of AI and optical sorters and magnets and all kinds of fancy robotics that's helping to sort materials more cleanly and efficiently and with less labor and less danger to workers and so forth. But that equipment is very capital intensive and very expensive to build these new facilities. So that too is an economy of scale operation that will have far-reaching effects or ramifications for the industry.
Gotcha. Thank you. Rob, would you like me to share any of the ideas for future webinar topics, or just got a couple? Is that just for us?
We'll do that at the end.
Okay. Cool. All right. Well, thank you, Jim. Thanks for the presentation. A lot of good information.
Welcome.
Yeah. Now we're off to Rob.
Okay. Well, thanks everybody. Welcome to another waste information seminar from SWEEP. We are a triple bottom line performance standard for the solid waste industry. We were designed to complement the true standard, which basically takes sustainable materials management and zero waste up to the curbside, and then SWEEP is the system into which all of your efforts at the building level get plugged into the broader system. We, as Natasha mentioned, the experience I had developing LEAD, we've applied to SWEEP, and it is sort of a LEAD for solid waste standard. But we are creating a system of 3 standards to try and address at least the top 3 quartiles of the market. For those at the very bleeding edge, if you will, we will have a SWEEP 0 standard, which we will begin development on later this year. If you are interested in being on the SWEEP 0 committee, we invite you to join SWEEP, and we will get that process going. A little bit later on, we will be creating the SWEEP standard to complement SWEEP Plus, which is the current standard out for pilot right now. That's probably the closest lead analog right now, as it's designed to cover the top quartile. And then the mid-market standard of sweep, which is looking not only at achievement, but also the level of improvement that a program makes is one of the things that we will emphasize in that standard. So sweep itself has 5 performance categories. Initially, we are looking to establish a foundation and framework for policies around sustainable materials management. We are also looking to set up a basis for looking at waste statistics and also emphasizing or giving more importance to waste source reduction and reuse through the waste generation and prevention category. And then we get into the mechanics of the collection process, followed by recovery, and then lastly, disposal. The regular caveat applies. We do not give any credit for people who throw material away, but if you do manage your landfill for methane, for runoff, for leachate, minimizing disruption to your neighbors, regular safety programs, a lot of things like that, those are the kinds of activities that get credited for disposal under sweep. And so our target markets are local governments and the private service providers that supply waste management services, as well as campuses such as university, military bases, maybe even hospital complexes in certain situations. Similar to LEED, we have 4 levels of certification for sweep and sweep plus. Certified silver, gold, platinum. We have a mock-up of the platinum plaque for sweep plus. We anticipate having our first certified projects coming out of the pipeline in the next month or so. So stay tuned for that. That's going to be very exciting for everyone. We've created right from the outset an online set of forms that make it easy to enter your information, and those forms are supported by an integrated online certification manual, as well as consistent calculators to complement, so that unlike LEED, where you have to basically at least for the first several years, figure out your own calculation method, then put it in to see if it would be acceptable. We're creating standardized calculators from the very beginning. Our goal is to create a consistent national framework for sustainable materials management, as well as develop standardized definition of material categories, performance calculations, and other facets of the industry. One of the big challenges getting off the ground has been the Tower of Babel that is in the industry. And hopefully we will see, as things become more standardized, more consistent performance, more consistent reporting, and improved performance, since everyone is singing from the same sheet of music. And we also have an important purpose in identifying and recognizing leaders in local government waste programs, as well as those providing services to support those programs. And then a map to continuous improvement, whether you are moving from a silver to a gold to a platinum level within sweep or sweep plus, or whether you're looking to move between sweep to sweep plus to sweep zero. There is a pathway of continuous performance available within the system, and that we hope that continuous improvement process transform the industry and moves it along as rapidly as we need to, given the challenges of the environmental challenges of climate change and other important issues. So as Jim mentioned, against the backdrop of rising landfill pricing, we've had a highly volatile 5 years, where we've seen variance in material categories up to 7-fold between the low and the high. In other words, the high price is 7 times the low price within 5 years. And Jim mentioned that there are a lot of improvements happening in material sorting and the technologies and everything like that. And these are very impressive and very important improvements. But one of the big challenges that people have is investing in these technologies, either at the private sector or in the municipal sector, because investors are looking at commodity prices and their volatility, and they're quite rightly thinking that there's a significant risk in investing in this new fancy equipment if prices are just going to be whipsawing, 2 to 3x within a year, which we definitely have seen. The variance is a little bit less if you look at a blended ton pricing. We use the NERC mix of blended materials to determine what that blended ton was, but it basically mixes plastic, glass, metals, paper together, and we've also done some calculations on whether it includes the residue or contamination or not. And sadly, contamination has been going up in part because of disruptions in the market because of China and other and COVID and other factors. Plus a lot of wish cycling, folks that say this is plastic, it should be recycled. I'm going to send a signal to the market and put it in the bin to demonstrate that I think this ought to be done. And so that, that action, which may have a good intention at its heart, actually is one of the things that really has made the economics of the back end very, very difficult. And so, the most volatility, and without too much surprise, has been seen in the last couple of years. We had a huge run up between 2021 and 2022, and then an almost equally precipitous drop after the peak in mid 2022, and we see that across numerous commodities, which we will show in the moment. Looking at PET, I'm only focusing on PET and HDPE for today, but we may be doing a blog piece afterwards where we'll look at films and polypropylene and other elements of HDPE for et cetera. So we will send an email to everybody on the webinar about that blog post, and so stay tuned and for more data. But here we've combined a bunch of regional pricings as well as the national pricing. The chart's a little busy, but one of the things that was quite surprising to me in going through this was how much variance there was between regions, even within commodities, and it very clearly indicated to me that the market is not. These are not national markets in many cases. Maybe more so for metals and glass, but plastic and fiber, there's a large variance between the various and sundry regions. And the regions I'm using are the ones defined by recyclingmarkets.net. And so if you want to go to recyclingmarkets.net, you can see which, what is in Chicago, what is in Atlanta, LA, New York, et cetera. Again, for PET, we're seeing almost a 7x variance between high and low pricing. And as you can see from the graph, things were fairly stable between 2017 and, the end of 2019, and then 2020, the bottom dropped out. Brief recovery in 2021, and then a big spike in 2022, and then almost free fall after that, which I found quite interesting, particularly given the profound interest in removing plastics from the market. It could be that this renewed interest is throwing a lot of material into the market, which is reducing its price. But I'm also seeing and hearing from a lot of post-consumer collection or post-consumer product companies that consumer product companies trying to put post-consumer material into their packaging, that they're having trouble getting the volumes they need to meet their goals. So there's quite an overhang, even though pricing has varied quite a bit between what the consumer products industry needs and what they can find in the market. With HDPE, slightly less volatile, 5x versus 7, but still a very, very strong drop in the last year between the 2021 high and what we saw, last year. There's been a slight recovery in the last few months, but again, generally, reasonably stable through 2019, and then a big spike up to 2021, and then a big drop. And again, probably similar dynamics that we're seeing with the PET market. In metals, not surprisingly, less variance compared with plastic, but everything post-pandemic peaked and then has had a bit of an overshoot. I think there's probably been some lag in materials coming into the market after the price run up. And so it shows that markets work, but the precipitousness with which prices go up and down makes it very hard to create a stable, continual market. And that's one of the things that the customers of recovered products are facing, is that it's either feast or famine, both in terms of availability and pricing. And then, when availability goes up, often quality goes down. And so that's another issue that, SWEEP looks to address by, giving credit for higher purity rates, lower contamination, education programs, improved equipment, and having more pathways for consumers to get materials into the recovered material market. So metals, not super interesting for the first few years, and then pretty strong run up in the 20 months between the low and the high, and then a fairly precipitous drop. But even less volatility, below 4 and below 2 between 1 year and 5 years, compared with the plastics. And then looking at glass, pretty flat, not a lot of value. The blue line represents color sorted. It's an aggregation of sorted by color, flint, clear, and flint, green, and amber glass. And then the orange brown line represents when you have the 3 glass mix included in it. 3 glass mixes tend to be a negative value. In other words, you have to pay people to take it away, but it costs less to dispose of mixed glass that way than to landfill it. So that's why there is a fairly robust market for that material. So OCC, not surprisingly, is one of the most volatile commodities. We saw huge demand for packaging, particularly shipping packaging, in the run-up to 2022 during the pandemic. And that has, similarly resulted in a very significant supply coming into the market. And so, getting that all balanced out is again, there's quite a bit, there's less regional variance, but still, you're seeing variances between US regions of up to 40% for fiber commodities, whether it's mixed paper, various sorts of mixed paper, or OCC. And consistent with its high volatility, OCC has interestingly, its high was before the pandemic, but it's seen a nearly 80% decline after the peak in 2021. And then contrasting that with mixed paper, again, similar kind of high in the 17, but then there was a 5-year high earlier, about a year ago, and then a slightly lower decline that happened since the peak was reached. But slightly less variance here. Only a 4x, 2 to 4x variance compared with the OCC. And then let's see, did I mix? Okay, so the blended ton pricing shows when you have the weighted average, and I should make a note on this. The averages that were used in the previous graphs are not weighted averages. In other words, some regions obviously are bigger than others. And so, if we did a regional weighting exercise, which may be something we'll do down the road, those numbers would change slightly to reflect, not only the price variance, but also the volume variance. So I just wanted to note that if somebody has done a weighted price average analysis of commodities, of recycled commodities, they would come up with different numbers than we have here. But again, similar kind of peak to trough to peak and then back down again is what we're seeing with blended tons. That includes PET, HDPE, 3 to 7 film commingled, rigid, bulky, and also ferrous and non-ferrous metals, and then mixed paper and OCC as well. So clearly, you can see that the presence of contamination makes a big difference in the overall price. So obviously, the less contamination there is, the higher price you'll get. And this is where consumer education, but also the more sophisticated sorting equipment that Jim mentioned in terms of opticals, et cetera, to clean up the contamination at the end are going to be very important and show that these are very highly cost-effective investments over any time. And so this is the kind of thing that if you're looking to improve the economics of your system and you're trying to justify it, rather than looking at the volatility of the pricing, emphasize the fairly consistent delta between the two, between materials that are contaminated and materials that are not, and that should give the bankers a little bit more comfort in investing in your in your technology. So I think we're open for questions now, and looks like we've got a few. Natasha, did you want to do that? And questions can be for me or Jim.
Sure. The only other question I think I saw, get this thing. Someone was curious to know where you were getting the information when you were talking about the PET market highs and lows, and mentioned that they usually get their numbers from the plastics exchange.
Yeah, so there are a number of price clearinghouses. The one we used for this was recyclingmarkets.net. They've got monthly, or they check a variety of, they check multiple brokers multiple times per month, and then post changes for the ISRI specified materials. But there are other brokers that provide that information. And given the high variance within regions, it's very possible that one of the things that I was very interested to see was how much lower the commodity prices were in the Pacific Northwest and on the West Coast generally compared with other parts of the country. And that could be in part because of the importance of the overseas markets for the West Coast. And Jim, please, I'm hypothesizing here, and I should probably shut up and let you talk. My thesis was that, given the proximity of China and the relative cost or relative inexpensiveness of shipping materials to China compared with overland in the US, that it made more sense to pay lower prices and get it over to China than to pack it in a truck and send it east. But I could be completely wrong.
Oh, well, yeah, as far as I understand, except, beginning in, China implemented green fence in 2013 and then later SWORD, which was to prohibit, for decades, we'd sent all our recyclables over there. And a lot of that came with a great deal of contamination, which was basically unrecyclable and piling up in their environment. And so they implemented these standards through the World Trade Organization that mandated a very low acceptable contamination rate, like 0.5%, whereas maybe it was 5 or 10% had been allowed earlier, which in practicality, prohibited a lot of waste from going to China anymore after 2017 or so. However, as I understand it, some of these other countries like Vietnam and Indonesia, Malaysia, perhaps, have stepped up and are importing recyclables, but nowhere near the levels that China was able to accept. But Rob, as I understand it, you're right. It was cheaper to put it in a shipping container and send it overseas than even to send it by rail to the East Coast. So in this country, so it made it difficult for guys even recycling certain metals, which are very valuable commodities. It was almost still cheaper to send it overseas.
Yeah. So we got an interesting question about some of the factors driving what are some of the factors driving the volatility? And when I was in college, I took a lot of courses on system dynamics and how complex systems interact. And one of the fun games that we played is called the beer game. And this is, they also play this in business school a lot. And then basically what it does is it sort of shows the impacts of how the rate of information flow between different parties in a supply chain can affect the quantities available, et cetera. And either you've done it or you're not, but not to ruin the surprise, but usually what happens at the end of the beer game is that the customer who's been desperate for whatever commodity it is that you're trying to buy, in this case it's beer, ends up getting a full container ship of beer at the end, far more than they can do. And because what happens is that because the lag between demand that they're seeing and the ability of the supply chain to compensate for it, if demand grows and supply chain can't meet it, then a little bit less gets delivered. So the customer says, well, I got less, so I'm going to order more next time. And so what ends up happening is this giant pulse. It's called the bullwhip effect. If you want to look it up, this giant pulse of material ends up coming on the market, and then prices go down, and the whole thing, you sort of have these overshoots and collapses, which is what we see. So probably what's happening is that prices are going way up, and it takes time to get more material, but people are like, wow, prices are great, and we're gonna add more people and add more delivery and more routes and get everything going, and life is good. And then all of this material starts coming on the market. What happens is that the price goes into the toilet, right? And then what happens is that, supply then, everybody shuts off their programs or curtails it or whatever, supply dries up and the manufacturers are like, we got to get stuff. So we're going to pay more money for it. And then the cycle starts over again. So this is not an unusual cycle for a commodity-based system. So this behavior is not unexpected. At least, it has a lot of the characteristics of many commodity markets that I've looked at. Wanted to, in our last few minutes, wanted to also just highlight one of our new SWEEP members, LOSI, which has a great methane capture and emission reduction technology. They will be presenting on landfill methane and how to reduce methane emissions from the waste industry. We will look at food waste and capture and the importance of those types of programs in addition, and how SWEEP incentivizes those types of things. So please attend. We really love giving these webinars, and we will send around the slides as well as a link to the webinar once we get it up onto the site. And so hopefully we'll be able to see some of you at some industry events in the future. Not sure we're going to make it to Waste Expo this year, but we'll see. We are trying to line up our dance card and figure out where to prioritize, but we definitely look forward to seeing some of our friends out on the conference circuit. Jim, Natasha, any things that you want to wrap up with?
Well, I'll just say I'll be at Waste Expo, and happy to meet with anybody who wants to talk about SWEEP or anything else, while we're there. And if we do that at the expo or in the French Quarter, I'll be happy either way.
Jim will be. Let's be honest.
Yes.
Jim will be happier in the French Quarter, but we will be at SWANA.
Yeah. In Atlanta at the end of April.
So that's our plan. So if there are no more questions, thank you very much for spending your afternoon with us. We really appreciate your interest and attention, and keep a lookout for the link posting the webinar and the slides for in the next week or two.
Great.
And that concludes.
Thanks for joining.
Yeah, thank you very, very much, everybody, for attending.
Bye.
Bye.